One of the most reputable investors, Warren Buffett, said, "I love dividends because they represent a direct cash return on your investment, no matter what the market is doing." For your convenience, I analyzed the secrets that helped Warren Buffett succeed. Watch this video till the end, cause I will provide you with the secrets that helped many profitable investors make a living out of dividend-paying stocks pretty much passively. Nowadays, many investors have the stereotype that dividends made from the stock market are just a small bonus. However, they can be very powerful fuel to reach your financial goals. The stereotype usually fades away after investors are presented with the 6 dividend-paying stocks that can even pay your rent and retire your family. Spoiler alert, this video will really improve your financial future since we will go through what are monthly dividend stocks, advantages of investing in monthly dividend stocks, how to select stocks, discuss top 6 picks for stocks that will even pay your rent, and how much you need invested. Best part is that the investment you need to make is way lower than you might think to earn monthly income of about $2,000 per month. So, what are the monthly dividend paying stocks? Those are type of stocks that pays you dividends on a monthly basis. That's different from a typical more common quarterly or even annually paid dividends. Monthly dividend paying stocks are mostly released by companies that are able to generate steady and consistent cash flow and have commitment to provide income to the shareholders using dividends. Advantages of those type of stocks are: stream of income is regular since every single month investors are provided with a dividend payout. That allows investors for better budgeting and overall financial situation planning. This is very important for the individuals that rely on covering their everyday expenses or paying rent with dividends. Monthly dividends provide a reliable cash flow and that can be reinvested to take advantage of compound interest over time and increase wealth drastically and enhance long-term results. Monthly dividend stocks might be more appealing to income-oriented investors rather than growth investors. That's because these type of stocks are targeted for retired or wanna-be retired investors. Consistent and frequent dividends provide sense of stability and reduce reliance on selling shares for income. Now, let's talk about selection criteria. First, it is important to look at something called dividend yield. This indicates how much money we can get from a dividend compared to the current price of the stock. However, we need to be certain that company can continue to pay those dividends and is able to keep paying in the long run. Secondly, it is important to understand how stable the company is. You need to invest in company that has good business foundation, keeps earning income and is financially healthy. If these 3 indicators are positive, we can trust that the company will keep paying dividends for years to come, thus making investors trust and possibly invest more. Last criteria we should consider before putting our hard-earned money into some stock is to analyze the growth potential of the company. This basically means that our goal is to find a company which has potential to increase its value over time in addition of paying dividends. All these points we discussed above are kept in mind when we choose stocks that provide investors with reliable dividend income, have a stable foundation and is trustworthy, have potential to grow in the future. So if you are not afraid of a little bit of risk and want to know top 6 stocks that will make you over $2,000 per month and will pay your rent, continue watching this video. Shares will be ranked from the lowest dividend yield to the highest. Watch this video till the end, cause in the end we will calculate how much money you need to invest to earn $2,000 per month with these stocks. Number 1. Stag Industrial having a dividend yield of 4.23%. Stag Industrial is a REIT, which stands for Real Estate Investment Trust, and it focuses on the acquisition and operation of industrial properties throughout the United States. By targeting this type of properties, Stag has developed an investment strategy that helps investors find a powerful balance of income plus growth. Stag Industrial REIT owns industrial real estate, specifically warehouses and light industrial facilities. That is important because these properties have currently high demand. That is because firstly, the pandemic accelerated adoption of online businesses and e-commerce, which means increased warehouse need. As well, ongoing supply chain challenges increased demand for those type of properties. Those are the reasons why we currently have high occupancy levels and rising rental rates. That allows Stag Industrial REIT consistently produce rental income stream. Another important thing is that over the years Stag Industrial REIT consistently increased dividend payouts. This is made possible because REIT had the ability to consistently expand its portfolio. In the last decade, Stag Industrial REIT added 400 new properties to its portfolio. Total portfolio is expanded to over 500 buildings. This means more diversification and stronger company with more income generating assets. Consistent growth of the company and dividend yield increases makes seasoned investors more and more interested in Stag REIT. Number 2. The realty income having dividend yield of 5.08%. This is an S&P 500 company and member of the S&P 500 Dividend Aristocrats Index. This company proudly calls itself the monthly dividend company, since realty income company stands out as the leading provider of monthly dividend stocks. Company has an outstanding history of paying 600 consecutive monthly dividends. Also, since it was officially offered for a public in 1994, realty income increased its dividends over 100 times and achieved a compound annual growth rate of 4.5%. One more thing, this company have 24 years of consecutive dividend increases. Analyzing the future potential of the stock, realty income should be able to deliver a steadily growing monthly income stream for investors. In 2021, company made a move and acquired VEREIT, which stands for VEREIT, Latin word meaning truth. This strategic purchase combined of $6 billion worth of properties is expected to boost realty income's cash flow per share. It's Gentleman's Finance channel. Here we'll learn about different business opportunities, how to make money and invest wisely. Here you will also learn how to increase your wealth and become debt-free. All men should take care of their own finance. If you found any value so far, please make sure to subscribe this channel and hit the like button. Now let's go back to the video. Number 3. Oxford Square Capital Corp. Having a forward dividend yield of 13.5%. This stock is a publicly traded closed-end management investment company which has investment objective to maximize its portfolio's total return. Oxford Square Capital Corp operates as a business development company that functions similar to a hedge fund. This means company is actively seeking profitable investment opportunities across various sectors. This stock is engaged in a diversified investments. Company focuses on enterprises that are neither large, neither small. These companies normally have annual revenues of less than $200 million, making them substantial and viable entities. Oxford Square Capital Corp is very good at leveraging its understanding to identify investment opportunities that have good potential for high return of investment. We all know that any investment has its own risk factors. However, company's diversified approach provide at least some level of stability for its shareholders. Number 4. Orchid Island Capital Inc. Having a forward dividend yield of 17.3%. This company specializes in residential mortgage-backed securities or RMBS within the real estate sector. Orchid Inc. primarily investing in these securities and generating income from interest payments made on the underlying residential mortgages. Similar like other REITs, Orchid Island Inc. distributes dividends to its shareholders. This company by law makes sure that 90% of its taxable income is shared with investors. This type of investment is great if you do not have a capital yet for direct real estate investing. If you want to learn more about REITs, I made a detailed video about REIT investments in pinned comments. Number 5. Armor Residential REIT Inc. having dividend yield of 18.5%. This REIT specializes in residential mortgages that are protected by the government. Mortgages includes agency debt backed by fixed rate, adjustable rate home loans, hybrid. Like any other real estate stock, Armor operates as real estate investment trust. As a REIT, as mentioned before, company by law has to distribute at least 90% of its taxable income in the form of dividends. This secures consistent and long-lasting dividends for investors. Number 6. The San Juan Basin Royalty Trust, having a dividend yield of 22.5%. Well, I'm sure the catchy number of 22.5% already sold you this company. However, before taking action, we first need to understand the type of company. SJT is in the category of a depletion trust. This basically means that as a partner, the assets being purchased are the fixed reserve of fossil fuels underground. The returns of this company are based on extraction and later on selling these oils and gas reserves. In the last year, energy prices were advantageous for companies like SJT and other drillers. This means inflated payouts for investors as well. One more thing worth noting, that SJT brought its own resources to the market and that boosted company's return even more. If one individual invested in this SJT stock, he would be indirectly participating in the fossil fuel industry. The company's operation is very much dependent to the extraction and selling the oil, which obviously we have limited access to. This means the energy market can be more volatile than others, but with the greater risk comes greater reward. Any investor could be involved in SJT or other energy sector high dividend stock and acquire consistent income from a monthly dividends. Higher dividend income means easier to make a living or pay a rent out of dividend income. As we analyze the risk and rewards of this type of dividend stock, we must understand that even if on paper dividend yield of 22.5% might look super attractive, we have to consider the fluctuations in oil prices and the associated risks before investing. Now, as we went through top 6 stocks, we can finally calculate how much invested we need to reach $2,000 per month income. We will calculate taking the average returns of 6 mentioned stocks and assuming you would invest equal amount. So, let's calculate the average return of these 6 stocks first. The returns are 4.23% plus 5.08% plus 13.5% plus 17.3% plus 18.5% plus 22.5%. All this has to be divided by 6 and it equals in 13.51%. This return of investment is annual, which means we will get 13.51% of income from our invested amount of money yearly. Knowing that, we can understand that to reach our earlier stated goal of $2,000 per month, we need to earn $24,000 in a year. To calculate total investment required, we divide the desired annual income, which is $24,000, by the annual average return percentage, which is 13.51%. So $24,000 divided by 15.51% equals $177,646. So to have a passive stream of income of $2,000 per month, we would need a total investment of $177,646. This formula ensures that our investments can generate a desired income on a monthly basis. And now, if you are interested to know how much money you need invested to produce yourself $6,000 per month with ETF investment vehicle, which is arguably more stable and less stressful to generate passive income from, click on the link at the end of this video or in the video description. If you found any value, don't forget to subscribe and press that bell icon. It helps way more than you can imagine.